But let's get talking about numbers. Vijay Dewan, who's the managing director at Apeejay Surrendra Park Hotels, known better as the Park Hotels Group itself, joins in now. Thanks a lot for joining in, Mr. Dewan. We see your numbers, the third quarter, seasonally the strongest for the hotel industry itself. And you had promised, better average room rates in the second half, largely because of a couple of the palaces that you've launched as well. So that is really the first question. What is the occupancy and the average room rate of the new palace hotels? And what would their full year contribution to your results be? What's your prognosis for the next financial year?
So I'm firstly delighted to be on the channel with you. Thank you for inviting me. The first and foremost thing is that we have had an excellent and remarkable 2024. It has been a year of triumph and success for us. We had a successful IPO, and today we are a debt-free company. And most importantly, we have launched the two palace hotels, the Lotus Palace at Chettinad and the majestic Ranbasta Palace at Patiala. Also, we have launched Zone Connect at Hotel at Prayagraj just before the start of the Kumbh festivals. So that hotel is also doing exceedingly well. In terms of your question, we have achieved for this quarter, we have achieved an occupancy of 91%, which is India's highest occupancy. The ARR has grown in double digit, and the RevPAR has grown by 12%. And the outlook remains very, very positive. All the indicators at the moment are very, very strong, and we expect the double-digit growth to continue. In terms of the overall numbers on a quarter-to-quarter basis, if you were to look at, they are up 25%. Year-on-year basis, the operating performance is up 11%, the EBITDA is up 11%. So the outlook, the current performance has been excellent, and the outlook is also very, very good.
All right. Hi, Mr. Dewan, and good day, and good to see you on the show. Give us a few more details. What kind of room addition are you looking at in FY26? How much will you end up with in FY25? And also, if you could help us out with your operating margins, what kind of EBITDA margin should we work with?
So currently, we are, firstly, to answer your last question, we are currently operating at an EBITDA margin of 35% and a PAT at 18%. And these margins are likely to continue as we sort of move forward. Most importantly, currently we have about 2,495 keys in our portfolio. We have 36 hotels, and we plan to double this inventory over the next 4 years, taking it to 5,048. So most of our hotels, the work on all the projects which we have undertaken has already started. We plan to launch our hotel on EM Bypass in terms of the construction of the project on EM Bypass, Calcutta, before the festive season. This will be followed by the start of the construction at the Pune hotel, followed by the start of the construction at a hotel in Visakhapatnam and Navi Mumbai. So all our projects are on course. Currently, as I said, we have 2,495 keys, and we plan to take it to 5,048 keys over the next 4 to 5 years. So all development plans are on course.
That's perfect for the next question that we have to ask you, because if you're doubling your, room portfolio, how much of that would be via the owned business? How much of that would be managed? If you could give us a sense of that, because currently it looks like by just the number of rooms that you have, it's almost 50-50.
Yes, so currently we have 1,101 keys on the ownership side of the business. We plan to add 830 keys over the next 4 years. And on the management side, we plan to add 1,666 keys. So all in all, this adds up to 5,000. With some leases, it adds up to 5,048 keys. The most important thing is that we have achieved 100 stores in our Flurys business, which is the bakery and cafe business. We have reached the 100 store mark, and we plan to be at the 200 store mark by 2027, because that's the year when Flurys celebrates its centenary. So in the F&B space also, we are growing at a very fast rate. We plan to add 40 to 50 outlets on a consistent basis over the next 5 years.
Right. And Flurys currently is, is it EBITDA positive? And what proportion of your revenues do you expect to come from Flurys over the next couple of years, since you've been so strong in store additions out here?
So Flurys business currently is about 9% of our total revenues, and this business is expected to go up to 12% by 2027. So it is growing, as I mentioned, at the rate of 40 to 50 stores on a yearly basis. We entered the city of Mumbai 2 years back, and today we have 16 outlets between Colaba and Malad. We have recently entered the city of Hyderabad, where we have opened 2 outlets, the most significant one, which we have opened recently at Banjara Hills. And we plan to add actually another 14 stores during the course of this financial year.
Is it EBITDA positive? Mr. Dewan, is it EBITDA positive?
Yeah, Flurys has been always providing for industry-leading margins. The EBITDA margin for Flurys business is in the range of 17 to 18%, and we plan to retain this percentage going forward. In fact, it is expected, as the stores sort of stabilize in this year, the stores which we have just opened, as they stabilize, we expect the business, the EBITDA margins to further improve. Currently, we have industry-leading EBITDA margins at 17 to 18%, but this may actually improve in the coming years to 20 to 22%.
All right, we take that point. Wish you good luck for all the foray into Flurys and the other park palaces, etc., that you've added as well. The sector having a fair amount of tailwinds as well, and you stand to benefit from that. We take